Hi, this is Joe Shahada from Top Tier Capital. Let's do some currency analysis. So this first chart I have here is a chart of the Euro US dollar on the daily time frame. And I've already drawn a trend channel on here. You can see the trend channel that we were in for a while, for many months now, and we finally broke out of it here, and this is a definitive breakout. So what defines this breakout is we have a close the day before, which was below the channel, and then today we opened below the channel, closed below the channel, and the highs were also below that channel. So I'd be looking to the top of this channel now as being resistance moving forward if we do try to move higher. So that should be a significant level since we broke out of it. That usually turns into resistance then, since it was support in the past. And same thing here. This brown line was significant resistance when we were moving higher, and it was already proved to be support once. So it was a double top back here that eventually turned into a triple top, and then when we finally broke out of it, we saw higher prices. But then when we moved down to it here, you can see we kind of congested around it, and then it became support and pushed the market higher. So I'd be looking to this level for support to the downside. Should be very significant. I've also added the parabolic ZAR on here. You can see it was fabulously moving higher, and then it turned down. That's not necessarily a sell indicator. If you were long, it's a good like trailing stop indicator to get out of your position, but just wanted to point that one out. That's now trending lower. And the indicator I have on the bottom here is the ADX. And I've drawn, or I didn't draw anything. The blue line and the red line are the D plus and D minus lines. If you don't know what this indicator is, I'll leave a link in the description to somebody explaining it very well. So the green line is the ADX, as I mentioned, and it has turned down. And now you can see when it gets to these levels and turns down what happened in the past. We had a little bit of a correction that turned into a bigger correction eventually. So I think we could see that moving forward. I think we could see lower prices in the euro moving forward. And personally, I'm looking to short the euro. I haven't entered anything yet, but I'd like to see higher prices first. Perhaps maybe a retest up here, but you know, I'm never going to get what I want. But that's just a trade idea. I'll put that out there in more detail if some other development occurs. So the next chart I want to show is the US dollar JPY. This is a daily time frame here, and this might look very weird or maybe interesting to you. This indicator is the Ichimoku. If you're not familiar with this one, then there's not enough time for me to explain how to use it. I'll put a link in that description to that one as well. But for now, I'm just going to assume you know what it is. And then the bars, the color of the bars and the way they're shaped and everything is called the Heikin Ashi indicator. Heikin Ashi. And I'll put a link into that one too. It's a great indicator for trend. You can see the bars are blue when the trend is higher and they're red when they're lower. And it's just a great indicator. And the whole chart I'm showing here is what they use a lot in Japan. So this is why I'm showing it. It's a great indicator to use. So what are these lines here? The red line is the Tenkan line, and the green line is the Kijin, this like lime green line. So when the red line is above the green line, it's bullish and we are going higher. So we are clearly still going higher. There is no indicator here telling you to sell. If you already were long this, I have to applaud you, but there's still nothing telling you to sell here either. Usually, a kind of a trailing stop thing, kind of like the parabolic ZAR, is when you see this turn down, the green line turn negative, and you can see throughout this entire rally, it's either flat or positive. And flat doesn't mean sell, flat means stay with the trend. So we're still flat, it hasn't turned negative. It's really a fantastic trend, and we all know the story with this one is the Bank of Japan has been wanting a weaker yen, and with this chart rising, that means the yen has been getting weaker, so what they're doing is working. And I wouldn't fight the Bank of Japan. You don't have enough money to do it, so I don't care who you are. Now, however, I think it is extremely overbought. I mean, this is parabolic here, and when we do finally correct, because it will happen, I think we could see prices down into this cloud. And right now, I think it could be like between the 88 to 86 level. I'm not doing any kind of short trades here, no ideas yet, but I think we could crash hard, or correct hard, not necessarily crash, into this cloud, and that cloud could be serving as support in that, and when that ever does happen. But a cool way to use Heikin Ashi is to, when you finally see some red candles forming and you get a signal from this line that it's negative, that's a great sell point. Well, I'll update that as we go, as we come along. There's nothing at this point telling you to get out if you are currently long. So I bet you're happy to hear that if you are long. So here's another chart of the US dollar JPY. This would be a more traditional analysis. Now this chart is the US dollar JPY still on the daily time frame, but I removed the Ichimoku indicator. We've got the 200-day SMA moving average here, and on the bottom we have the RSI. Now you can see this massive uptrend that we've been in. I drew a trend channel here. You can even see a couple days ago we closed above the trend channel, which is just amazing. And then we closed back into the channel today. Now, there's still nothing here indicating that that the trend is over. Now, as long as we're in this channel, the trend is on. So until there's a definitive breakout below the channel, we have to assume that, prices are going to just keep going up. Now, we've had a couple of interesting developments along the way. We had a massive divergence in the RSI while the prices were going higher, while the trend stayed up. And that's usually an early indication of selling pressure. However, we broke out of that trend on the RSI, meaning that we were going to have higher prices moving forward, and that's exactly what happened. When we broke out of the trend, you can see that we moved higher after that. Now, the RSI has turned below 70. It doesn't really mean anything yet. It doesn't mean that we should sell or anything like that. Now, it doesn't mean we should buy just because we're in this trend either. It's still massively overbought, and this thing can correct so fast, so hard, so fast, and I think that's what's going to happen. So I would be very cautious moving forward. If you're already long, just know that this thing can move really hard, really fast. The SMA down here is 15% off the price, and that's just insane for any kind of currency. It's usually never that bad. So that's our analysis for today. Thank you for watching, and as always, happy trading.